Hi everyone, today I want to talk about a REIT that I own, MPW. It's a REIT that a lot of news coming lately and a lot of ups and downs with this stock, and I want to run through a simplified analysis, show a bit of my thoughts on the REIT, if I intend to add more to my portfolio or get rid of my position. I want to discuss a few things. So in this video, we'll be talk about the business in a general way, about the risk involved with the operators, the debt maturity, if they will cut the dividends, what I think we will see some metrics and see how likely it is for them to cut the dividend. I'll talk a bit about my shares, the shares I own as well. And then to finalize, we talk about the 3 different scenarios, what I intend to do if one of those scenarios happen, and give my overall opinion on the stock after all the discussion. Just before we start the fun, here is the Dividend Fire channel. Please consider to subscribe the channel to follow our journey. I'm seeking to retire as early as possible, so I've been very aggressive on my dividend journey, and I'm sharing everything that I do, what I buy, what I sell, what is my thoughts, any news, anything that I found relevant and interesting to share, I'll be sharing here related to my journey of retiring early. So please subscribe to the channel. That motivates me to keep bringing this type of video. Overall, how solid, how necessary is this business? So that's one point that I consider in favor of MPW, because as they stated here, it has not changed. So it's still a REIT, our hospital REIT. We need hospitals, and they have a diversification inside the US and internationally as well. It's not a business that's go anywhere, and they own these properties, they own these hospitals, and this will be needed. And even if they struggle with some operators, they will be likely to find another operator, another tenants that will be replacing those other tenants. So that's just overall thoughts about the business they operate in. Like it's a really necessary business. Hardly you see this business going, like it's not expected they're going to bankrupt or something like that. So that's, I think, as a good starting point. Second, I want to talk about the risk involving the tenants. One of the biggest issues with MPW is like tenants struggling to pay, and one of the biggest problems was steward health, because they were 40% heavy on their MPW's portfolio. So they were very large tenants, and a very large tenant like that struggling impacted the business heavily as well. And now we have that here they state that steward healthcare accounted for 19% of total assets from June 30. From my point of view, when I bought MPW, I was buying this business with this risk here of a tenant with 40% total assets in the portfolio, bring that risk, and now it's down to 19%. This for me is a very good news. Like, it's like, for me, the business now is better than was before when I actually bought it. But in overall, the stock is still cheaper. So this, from my point of view, is a very good sign, because we have a bit more diversification in this portfolio. And not only the diversification of the portfolio, but it also shows that if they struggle with a tenant, they have ways of get rid of this tenant and bring a new one that will be better. So this also teaches lessons to the operators, tenant operators as well, because okay, if you don't pay, we can change and find another tenant. So I think this show a bit more strength for MPW side. So as we can see in the note, Common Spirit completes purchase of Stewards Utah operations. They replace Stewards healthcare on those Utah operations. This is a strong point for me. Another important point as well, the debt maturities. So they are stating that the maturity for 2024 is addressed because they had sold 7 Australian properties they had in the portfolio. So they're stating that the full repayment expected from sale of the Australian portfolio in 2023. So they expect the debt maturity from 2024 is covered, and they are confident that the subsequent maturities from the following years they will have flexibility to address that. So let's see how this will play. But for the short term here, talk about 2024, it's covered. The only concern for me is like, okay, they needed to do that. They need to pay some debt, so they had to sell this property. But if they get in a tight spot and the next years, will they continue selling properties? That would be very bad for the business, because we want the company bringing more properties. We want to the revenue. We want to the operation to increase the money that's falling into. So we want more properties in the end. So as a tough moment, I understand that they didn't want to cut the dividends and they wanted to pay that. So okay, let's get money from somewhere. We can't get more debt because the interest rates is very high and we already have a lot of debt. So we can't get debt to pay debt. It would be quite bad. So they had to sell. I understand that. So yeah, let's see how play for the next years. But at least for the very short term here, we see that's okay. It's addressed the debt issue for now. And let's see how it plays for the next year. According to them will be flexibility, and let's see how this will play. Now let's talk about the dividend. The dividend specifically, let's talk about some metrics, dividend metrics, and so we can discuss then about the dividend cut, the possibility of it. So the forward dividend yield now is for 14%, over 14%. FFO ratio a bit over 70% there. I think they accounting the whole year, but if we consider the FFO from the last quarter, this will be a bit better because it was quite a good FFO. But okay, let's work with 75%. Here's they start tell us that they will be able to cover the dividend from here alone. The 5-year growth rate is, for a business that's quite struggling, is not too bad, but it is counting the last 5 years. The recent years, I'm not sure how it is. So if you consider that the FFO of the Q2 was 41 and the dividend pay was 29 cents, we have a FFO ratio of 7%. It's not so bad. Considering this scenario, they would be able to cover the dividend without much struggle. But will the FFO continue that good? Then we'll see. If not, they will quite struggle. The prospect is not very good since we have less properties now since they sold some. But we have new tenants coming in. So let's see how this will play overall. Will another tenant start struggling to pay as well? They had been doing some improvements on getting the tenants on the rails and doing plans to get the tenants to pay the ones who are struggling. So they were doing some good work on that as well. So let's see how this will play. Will still going good or bad? This will be one of the most important things I would say. Let's talk about the dividend growth history as well. That's one thing about MPW. You see, they don't want to cut the dividend. They will cut only if it is the last resort. So we can see here from 2005, they started paying dividend and they went increasing 2006, 2007, 2008. But then, we already know what happened in 2008. We have that huge market crash, and 2009 they had to cut the dividend, but they kept the dividend 2010, 2011, 2012, and then from 2013 they start increasing the dividend. considered what happened to the market in 2008 for real estate. I think they didn't do too bad here actually. And then so we can start count from 2012. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 dividend increase, consecutive increase. But now on 2023, so far no dividend increase. If we still paying 29 cents per quarter till the end of the year, we'll kill this dividend growth, this consecutive dividend growth metric. I wouldn't find too bad either if they keep but doesn't cut. If they doesn't cut, would be not too bad. But there is still a chance they increase at least a tiny bit. Let's see how things will play to the end of the year. But is a thing we have to watch. But one thing for MPW is like, which I like when the company have this strong commitment with the shareholder about the dividend, because I am a dividend investor and I want to retire as early as possible. I need the dividend fall in my account, and I like these companies that stick to it. And I know they only cut the dividend if the last resort is just if it's the dividend or the business, so they will end up cutting the dividend, which a lot of people argue that the MPW should have to cut the dividend already for the health of the business, and I understand that. But other side of me, I think if they can keep the dividend, struggle a little bit now, and then like after a few years they get back on track, they get healthier again. For example, this downtime sometimes show some weakness of the business, and they can come out of the other side stronger. A good example is what they did with Steward Healthcare. Like they were way more concentrated on this tenant, and now they have a better diversification. Was a very heavy tenant with 40% of the total assets with on a single operator. Now they have a more diversified. So sometimes strong things, a tight situation force the business to either get better or get crushed. And then I hope MPW gets stronger. If that's so, who is getting into MPW through this tight market with tough moments probably will get nice fruits on the future. That's what I hope to happen. But now I want to talk about my shares, my thoughts, the 3 scenarios of the possible things that can happen to the dividends. But just before I progress, like I want to give another chance for you guys to subscribe to the channel to support this journey where I'm trying to seek retirement as early as possible, and I'll be sharing everything, all the moves I do in my portfolio or my thoughts. I'll be sharing with you guys all the experience and learning that I'm facing in this journey. So please subscribe to support us. And now I want to talk about my shares. So I have 100 shares of MPW with a dividend yield of over 12%. Who is buying with the current prices getting over 14%? I'm over 12%. My average cost is 5.58, and I'm down at the moment, just over 15% down on MPW. So saying that, I want to cover these 3 dividend scenarios. The first one is the dividend increase. They still have more 2 quarters to increase the dividend. A lot of people are also worried because they didn't announce the next dividend yet. So could the dividend cut could be coming just next quarter? But let's see. We still have the August to run for them to announce this dividend. So the loss is not the hope is not lost. So the dividend increase, they still can increase the dividend by the Q3 or Q4. I'm nearly sure that they won't do in the Q3. Maybe the Q4, maybe they still have a chance. If they increase 1 quarter at least, we have a dividend growth. Will the dividend streak will still continue to run, and we can say that okay, even if a tiny bit, the increase for 2023 as well. But it's a very not like to happen scenario. I would say it's very hard for this to happen. but it can happen, we never know. The other scenario is no dividend cut. They just keep the same 29 cents per quarter and move on. I think it's more likely scenario to happen. But I think it's possible that they increase the dividend because they are 10 years. They have been a whole decade working hard to add this value to the shareholder, to keep this strong track. A lot of dividend investors, they want to say, I invest in this stock, they increase the dividend for 10 years, they are solid, they have the commitment of the shareholder. A lot of investors want to say that when they are buying stock, and the MPW knows that. So there's a chance that they'll increase. Even if they can't, it's quite possible they will increase. But okay, since the moment's tough, they might just keep. And I put a very negative scenario here, a dividend cut of 50%. My dividend is 12%. If I get a dividend cut of 50%, let's say some crazy thing happens, the FFO fall from half, crazy things happen. They cut the dividend by half, and that's what happened. Let's say, crazy scenario. I still would be getting a 6% yield. Okay, I would be sad. I would. I would sell. Actually, I wouldn't sell. I would just keep. But I would be very sad. But still, I would be sad receiving 6% yield. What's not the end of the world is still a high yield comparing to a lot of other stocks. Yeah, would be awful. Would. But it still would be paying some dividend. Not too bad. 6%, not too bad. Sad, but true. If it happens, it happens. For who is buying right now, would be around the 70% after 50%. So in a crazy scenario, cutting 50% is still paying a decent yield. So this makes me think that, okay, is a risk I can take. Overall, giving my opinion here, I'm strongly thinking and adding more MPW, because from when I bought MPW, for me they're actually stronger than what they actually were before. So I'm actually happy the way things are going for MPW, if I'm honest. So I'm thinking might add more to my portfolio. I have 100 shares. I'm strongly thinking about adding more 100 shares. Maybe I start by adding 10 shares, then more 10 shares, and see how things goes, or add 50 shares first and then more 50 shares. I'm still thinking what I will do, but I'm strongly thinking and buying. But guys, remember, this is not a financial advice. I am not a financial advisor. Do your own research. Because it's your investment, it's your life, do what it thinks right for you. I have my risk aversion, you have yours. Everyone takes the risk that you can take. I'm also already, invested in MPW, so I can be biased towards this. I have a side of me that wants things to work well, because I'm a shareholder, I already have shares, so my brain is already thinking, I hope things go well. So I could be biased. Do your own research. Do what you believe is better for you, and see you in the next video. Bye bye.